This is the Griffin Podcast, episode number 95, Your Home Value. How does the math really work, sellers? Are you a home seller or a home buyer who has questions about selling or buying residential property? Or maybe you're an agent who needs a plan, but you can't find an easy way to get any of your answers? Well, then, hey, you are definitely in the right place. I'm Danny Griffin, the founder of The Griffin and the host of the Ask-A-Griffin podcast. And to help you take immediate action to get started in the right direction, if you're a seller, a buyer, or an agent, you can take advantage of our free step-by-step guides that are waiting for you at griffincourses.com. That's griffincourses.com. Okay, let's get started for all our sellers as we continue in our seller plan out there. Your home value. How does the math really work? So let's get into how math plays a role in determining a home price. First of all, let's just call out the world that we live in now and these online value algorithms. So, there are several companies out there like Redfin and Zillow, and they use these algorithms, and there are a lot of questions. How does that work? Well, really, it's not rocket science. It's the term big data, an algorithm somewhere in there with math. So it's like this big stew of all these things that might be scary when you first hear them, but really an algorithm is a process, typically a mathematical process with some logic in it that takes data and it tries to come to some sort of a conclusion, in this case, guesstimate, because, and I'll get into the details as to why the math really can't get to that accurate value that you need to get to price it correctly to begin with, or to make adjustments, figure out how much your asset's really worth. It's a complicated asset. Let's just leave it at that. So if you think about it, though, and I did a lot of studying about this because I needed to know as time went on. It was good. I mean, I think being in this business, when I learned it, a lot of people would just teach you, hey, go out and take a look at what's sold, and we would call them comparables, even though how do you really compare a house to a house? That's a difficult thing to begin with, but it's sort of the horseshoes game. Close enough, right? I'm going to take 5 or 6 properties that sold at least in the price range that you want. We're going to look at the differences. But there are other factors in life where value and mathematical formulas matter. Think your tax bill, okay? Your tax bill is a big deal. So have you ever wondered really how your tax bill is calculated, or your value to come up with your tax bill is calculated more appropriately? Well, I was curious. So one day I took a little journey down to the assessor's office, and I asked if I could have some time with the assessor and pick, at the time, his brain. And so we sat down, and I said, Danny Griffin from Griffin Realty Group, and I'm curious because I get this question all the time. How does this work? And so he went into all of the factors, which is pretty obvious. If you pull up an assessor sheet for your property, if you're a seller, and if you're not just curious as a buyer, you're looking at all of these factors that the town knows about you. So these town municipalities have this enormous task of having the data on a home. So think when a permit is pulled, all the data about the house or any subsequent permits are pulled. So the town has, or the municipality or whatever it might be where you live, they have data, and a lot of it, about your home. And then they can even start to make value judgments based on those permits, what sort of quality build it is. So it gets pretty complicated. So there's a lot of data in there. And they have to spit out a value that, according to the Department of Revenue, this is the way it was explained to me, that according to the Department of Revenue, the federal government, they stipulate to all these local municipalities that they must try to approximate what a ready, willing, and able buyer would pay for the property. Now, all of the agents out there listening to it are screaming, it has nothing to do with current value. Yes, I know that. So hang in there with me. It's called a lagging indicator of value. Now, I was fortunate enough to get a pretty heavy education in a Wall Street-like environment, or a finance-like environment, where I was involved in the certified financial analyst exam for at least the first 2 of 3 parts. And so I learned a lot about leading indicators of value, lagging indicators of value. So the lagging indicator of value means it's a slow process to come up with that value, as you can imagine. So over the course of a year in a town, a lot is moving and the data is changing. But whereas the marketplace and what goes under agreement today is a lead indicator of value. So we have this lagging thing for tax purposes, and we have a lead of what just went down with the solds today. So there they exist. So just understand that. And when I got that, I had this huge eureka moment. I said, I think the math is simpler than this word algorithm, which is scary if you've never messed around with learning what an algorithmic process is. And certainly I'll leave that to the total math geeks, and I love them for being who they are, and they can use these formulas. But I'm a practitioner in the field, and I have enough mathematical background to be dangerous to say, if I have the sold price, which is a leading indicator of value, and I have the assessed value, which is a lagging indicator of value, meaning the assessor told me it's about 18 months behind the marketplace. So imagine as the sold prices are higher, this assessed value is chasing them up and everybody's happy. But all of a sudden, when the market crashes, the assessed value is higher and the sold values are lower, and everybody's screaming at the assessor, right? Change my value. Okay, well, it's coming. That's just the ebb and flow of the way a lagging indicator chasing a lead indicator, like real sold prices, current market value per se. That's what happens. There you go. There is your simple explanation of what these are. But now, if you think back, I forget when we learned division. My gosh, it's elementary school somewhere, right? So I said, wait a minute. What if I took the leading indicator of value and I divided it by the lagging indicator of value? Could I come up with my own little mini algorithm that would show me what percentage of that number I was selling at? And so once I took the 5 that were most like them, at least in the price range, and I did this division, could I come up with a range? And I did. So let's just say right now, I looked at one the other day, it was 125% of the assessed value. Like I said, remember, we've been in this inflating environment, so it's most likely the sold prices are going to be well above the assessed values. So I had 125%. I think the low was just clipping under 100%, 95%. So I went to the top and I looked at that, pristine condition. And I looked at the one that was selling for 95% of its assessed value, below, not pristine condition. Voila, a measure of value. There you go. So the math was actually not hard to understand, how somebody could take big data and make a guess. So I have all these sold prices, big data, and I have all these assessed values, big data, and I put them together with some really sophisticated division. And I have my own little mini algorithm. However, the next point is you can't just look at the potential price range that this would sell in. By the way, I just took the subject. If I was at your house, I would take your assessed value, multiply it times 125%, looking at your house, seeing if it was in pristine condition. Maybe you deserve 125% too. And then I would look at the low one, 95%. If your house is a distress sale like that, maybe you only deserve 95%. Maybe that's what the market's going to bear. So that's the next point here, is that the price range should be narrowed based on additional physical, non-math characteristics. So you see, I can sit in my office and I could do the math on any seller's property just like that. Takes us about an hour to do one of these analyses. And then I could come to the house and I can look at the neighborhood factors. What do your neighbors look like? Because they affect your value. What does the neighborhood look like? Where are we? You've heard this in real estate forever. Location, location, location. Is it a 10 or is it not a 10? 10 out of 10 mean the best, right? So these are all non-math characteristics that I now have to bring to bear on this potential mathematical price range. I call it a trading range. You're going to trade, just like Wall Street and stock, you're going to trade inside this range of value, most likely. Unless we have a crazy market that's exploding to the upside, or a scary one that's collapsing to the downside. Then the math isn't so easy. We have to really watch almost every week what's happening in those extremes. But for the most part, we're not very long in an extreme market. It finds its sea legs pretty quickly. So now I pull up to your house and I look at the outside and I look at your landscaping. And again, you might be in an apartment. So I might look at the apartment building on the outside. I might look at where it is in the city of Boston. All of these things, right? They're non-math characteristics so that when we're discussing the range, we can say all of the non-math characteristics of the conditioning, the staging, the location, all of that can be considered, and the trend in the market. I mean, that's not as easy to throw into the algorithm. So we have to have all these non-math characteristics. And the final point that I would make here, so obviously math plus a physical visit, that's what you have to come up with a value. Please don't be that naive where you think you can just go online and there's your number. This isn't pricing it right bingo. There are so many factors, and the market is always fluid. You want to get a professional real estate agent in the house or a couple if you need a couple of opinions, and you'll see the range will start to tighten, and have people explain why they believe what they believe. Defend it. Don't get yesed by a real estate agent, and I'm warning you real estate agents, do your homework. Don't go in there and buy your listings by just yesing a seller. Sellers, you need hard advice in a tough market. And as I'm recording this one right here, we're going into a correcting market for sellers. You need real advice about the math and the condition your property's in and what you can do to win, no matter what's happening. But you have to remember that math doesn't lie, and you cannot ignore it. So stop that. If you're a seller, stop explaining away, but my house, but my situation. Look at a marketplace is so massive and powerful. There's no one individual situation that overcomes the reality of the moment. That's what analysis is all about. That's what real guidance is all about. You can't ignore it through your emotional attachment to your property or just dismissing. That's the law of corroboration or the law of commitment. You commit to an idea that your house is worth or your property is worth so much money that you dismiss the math to the contrary, or you dismiss the agent's opinion on the challenges that you'll face in the marketplace. Stop doing that. All you're doing is making for too long of a process. If sellers would listen more to the actual systematic way that houses get listed and sold, including the math and all the suggestions of the realtors, then you would condense the time that it takes. Otherwise, you're just wasting your time and polluting the market with an overpriced listing, which happens in every marketplace. How do I know that? We specialize in helping people whose listing has expired, meaning it went on sale and it didn't sell the first time. 5-6 months. Why? The average days on market was 30 days, 60 days, 90 or 120, whatever it is, and you expired, something was wrong. And mostly, it's the price wasn't close enough to bring the activity. It's not marketing, folks. You look at the seller plan, go to griffincourses.com and opt into the seller plan. You'll see right away the first thing we're going to talk to you about is pricing it right. That's why we're in that part of it in the podcast here. Okay, let me go back and summarize this. Sellers, here's your seller plan tip for the week. Your home value. Think about your home value and then ask yourself, how does the math work? The math that helps you come up with that value. And here are the 3 bullet points. 1, understand that online value algorithms like Zillow, Redfin, etc., they do nothing more than use big data and then a mathematical process to make a guesstimate of value. But that's where it ends. Because 2, that price range that you might find in a lot of different ways should be narrowed, tightened, based on additional physical, non-math characteristics. And of course, the market direction should be taken into account too, and that's not easy to capture in math. 3, just remember this final tip, that the math does not lie. So you can't just dismiss it and ignore it. You must understand it, especially when it's to the contrary of what you were thinking. Doesn't mean you can't challenge it, but you cannot dismiss it. Let me summarize it this way. There are several companies that have attempted to take a pure mathematical approach to evaluating a potential sales price range for your property. They use all the available public data and simple mathematical processes, like I suggested, division, to make a best guess of value. However, a true and useful price range will only be obtained by considering the non-mathematical physical characteristics that can only be seen in person and then considered against the math. All right, remember, you can take immediate action to get started in the right direction if you're a seller, or maybe a buyer or an agent who wants help by getting a copy of any of our free step-by-step guides at griffincourses.com. That's griffincourses.com. Also, don't forget to subscribe to this podcast on iTunes, Spotify, or wherever you listen. We also post our content on YouTube, so don't forget to subscribe to the Griffin channel. Okay, The Griffin channel. We do business as Griffin Realty Group as well, but it's The Griffin. We'd also appreciate it if you would share our content with home sellers, home buyers, or real estate agents who are in need of help. Pass it along to them, please. We'd appreciate that. But remember this, in this case today, if you're a home seller, or you're a home buyer, or you're an agent, nobody's coming for you. Nobody's coming to help you. So go take one of our plans and get to work on your own customization of that plan so that you can be successful with your next real estate transaction. Thanks for listening.